Welcome to the Alex Trade Channel. Today we're going to talk about what is often the key to successful trading, especially for beginner traders. We're going to talk about trends. This topic has been relevant for many years and definitely won't lose its significance. The well-known phrase, "the trend is the trader's best friend," really explains a lot in technical analysis. If you want to understand how to make money from price movements, how to avoid being a victim of random fluctuations, and learn to recognize long-term patterns, make sure to watch this video all the way to the end. You'll get real examples and practical tips. Because your finances are your responsibility. If you want to learn how to make money and manage your finances, subscribe to my Telegram channel. There, you'll find useful strategies, trade analyses, and tips that will help you level up. And I also have a free gift for you. Just shoot me a message, subscribe to YouTube, give it a like, and take what you can from the market. And we're off. As usual, let's get started with the trading. Let's go. All the links are in the description. Let's start with the dollar-yen currency pair. First, let's note the previous level that the price has already broken through and is now testing again. Let's also highlight another previous level. The price might head towards it. In addition, it's important to mark the trend line to make sure that the trend is indeed present and the price is moving. That's right. Once the price tests the former resistance level, which has now become support, you can confidently open a position. We're moving to the trading terminal and opening a short position with a volume of $500. Before we dive into the details, let's define what a trend is. A trend is the overall direction in which the price of an asset moves over a certain period of time. Technical analysts identify three main directions: uptrend, downtrend, and sideways flat. So, what's its importance? The thing is, the trend reflects the mood and expectations of the market. When the trend is upward, it means that most participants are expecting the price to rise and are ready to buy. When the trend is downward, it's the opposite. There's a prevailing sense of pessimism and a desire to sell, locking in losses or profits. Why is trend considered a best friend, trader? Because by trading with the trend, we follow the majority and leverage the natural strength of the market. This can significantly increase the chances of a profitable trade. That's the most important thing. Identify and enter at the right time. It is important to understand that trends do not just happen. They reflect the fundamental expectations and psychology of market participants. Often, it's the clearly defined trends that give traders confidence in the direction of their trades and allow them to plan their entry points in advance. However, no trend lasts forever, so even strong impulses are often interrupted by corrections or a change in the phase of movement. A smart approach to trading with the trend always includes risk management and timely recognition of potential reversal signals. In the meantime, our position is closing in the green, and we're making a profit of $380. Good result. Let's head over to the terminal and see how the price movement has changed during this time. However, it's already noticeable that the price has entered a sideways movement near the level. So, further trading here doesn't make sense. There's a high likelihood of either a breakout to the upside or a continuation of the downward trend. The situation is ambiguous, so let's switch to another currency pair. The next currency pair is the Australian dollar and the Canadian dollar. Here, the trend is already coming to an end, and we can see that the price has entered a sideways movement with a likely subsequent decline. Let's mark the important levels and make sure that the price is indeed moving within the sideways corridor and is already breaking through the support level. We also highlight previous levels that the price might reach. We're planning to open a short position. The RSI indicator is good, the volumes are 2, and a small local trend has formed on the chart. So, we won't think about it for too long. After another green candle, we open a short trade. Continuation of the local trend. We move to the trading terminal, select the desired currency pair, and open a short position with a volume of $500. To understand the market more deeply, it's useful to know not just the main directions, but also the phases of the trend. In an uptrend, There are moments of emergence when the price breaks through key levels. Then there's the development, a series of higher highs and higher lows. And finally, there's the fading or reversal. Often after a strong uptrend, we can see corrections. These are short price pullbacks that can provide a good entry point. The same logic applies to a downtrend. It's especially important to remember about sideways movements. The market doesn't always move in a clearly defined upward or downward direction. Sometimes the price gets stuck in a narrow range, and many traders prefer not to trade during these periods. Or they trade from the edges of that range. A trend is like a wave that picks up our trade. But if there's no wave, or it's hard to spot, it's better to wait it out and preserve your capital. Every successful trader was once a newbie. The main thing is to start. In my Telegram channel, you will find everything you need for a confident start in trading strategies, analysis, and useful tips. And to make this step even easier, just message me directly and get a free gift. Subscribe to my YouTube channel. Hit that like button and start changing your life. All the links are in the description already today. In the meantime, our position closes in the green and we make a profit of $380. The price has confidently gone down, showing the strength of the local trend. We broke through the level and most likely will continue moving down. However, to mix things up, it makes sense to look at other currency pairs. In such situations, you can keep opening short positions after a market correction. Overall, the trading environment here is quite favorable. Now let's move on to another currency pair, British pound to Japanese yen. There's a clear global trend here and an important level located at a round number. If you draw a trend line, it becomes clear that a triangle is forming on the chart, which, as we know, often leads to strong breakouts. Traders working with such patterns know that the movement within the triangle gradually narrows. It's also worth noting the previous high, which is above. It's possible that after the breakout, the price will pause. It's exactly with him. Since we're in a triangle, it makes sense to wait for a small correction and then jump in for a continuation of both the local and global trend, including a breakout of the level. Let's head over to the trading terminal and select the British pound and Japanese yen. We're waiting for a small correction, and we open a position for the continuation of the trend. Fortunately, there are plenty of tools to identify and confirm a trend. The simplest and most popular is the moving average. The essence of it is that lines of the average price over a certain period are plotted on the chart. When the price is confidently above the moving average, and the average itself is rising, this often indicates an upward trend. If the price is below the average and the average itself is pointing down, then we're dealing with a downward movement. There are also popular indicators like MACD and RSI that help you understand the strength of a trend or possible weakening. And of course, we can't forget about support and resistance, a horizontal level where the price reversed in the past. A breakout of such levels often indicates that the price or the trend may continue or, on the contrary, reverse. It's important to understand that. Indicators. It's a helpful tool, but not an absolute guarantee of an accurate forecast, so a comprehensive view and clear-headed calculations always come first. However, besides the usual indicators, you can also use completely different approaches to market analysis. For example, some traders bet on trading volumes. If the price is rising along with increased volumes, it can signal a continuation of the trend. Candlestick patterns have also gained a lot of popularity, like the Harami engulfing pattern, which clearly shows the shift in power between bulls and bears. Another method is range or channel analysis, where prices bounce off the upper and lower boundaries of the trading corridor. Finally, there are hybrid systems that combine classic technical patterns and volatility indicators, allowing for more precise entry and exit points without relying on just one single tool. In the meantime, our position is closing in the green, bringing in a profit of $355. The price has increased noticeably, which is very good. However, the level has not yet been broken and we are gradually approaching it. There might be another correction around that level, so it's worth keeping an eye on the situation. To mix things up, let's move on to another currency pair, US dollar, Canadian dollar. We've already broken through an important level, then had a slight correction, broke the level again, and after that, we went into another correction, forming a new level. Overall, there's a trend here, but the price is moving in a pretty narrow sideways corridor. We're also seeing a slight divergence, but we're planning to continue moving with the trend. Let's head to the terminal, set the volume to $500, and open a short position. So, let's set the scene. We have a rising market, the price has been going up for more than just a day or a week, and we can see a clear trend, with each new high being above the previous one, and the lows are gradually rising too. The simplest solution is to look for buying opportunities during corrections. As soon as we see a small pullback to the trend line or moving average, it could be a good time to enter. The objective during an uptrend could potentially be the nearest strong resistance level or a dynamic level that you've identified using indicators or patterns. The point is, by moving with the trend, we're trading with the wave, not against it. Just remember that the trend won't last forever, and it's important to know when to stop. At the same time, we shouldn't forget about the impact of news. Unexpected events can sharply correct even the most confident bull market. Some traders find it helpful to close positions after reaching the first target to lock in some profits and relieve psychological pressure. It can also be helpful to analyze the overall market dynamics, paying attention to related assets or sectors that might signal a potential slowdown. If the market starts losing volume during another price increase, that can be a warning sign for the bulls. In the end, it's the comprehensive analysis and systematic capital management that allow us to effectively follow the trend while controlling risks. In the meantime, our position is closing in the green. The price really did go down and moved in the direction we expected, which brought us a profit of $370. Let's go back to the terminal and see how everything unfolded. Indeed, the price has broken the previous lows, but it seems like it doesn't have enough energy for further declines. Now let's turn our attention to divergence. We're seeing a divergence between the indicator readings and the chart, and it's quite strong. Theoretically, you could try to go against the trend, but I wouldn't recommend that for beginners. Let's head to the terminal, set the volume to $500, and open a short position. Despite the simplicity of the idea behind trend trading, mistakes do happen. One of the most common mistakes is entering too late, when the trend has already been going on for a while and the news is constantly talking about record price increases. Many people are late and end up entering at the peaks. As a result, it often turns out that the market soon reverses and the person ends up losing money. Another mistake: confusing a short-term correction with a real reversal. Sometimes, traders exit good positions too early and miss out on the bulk of the movement. Finally, there is the problem of psychological pressure. If the price suddenly goes against you, there is always a temptation to average out or close the deal completely under the influence of emotions. It is important to stay calm, strictly follow your rules, and analyze the market picture comprehensively. It's really important to determine in advance how you'll act if the market turns against you, so you don't waste time making impulsive decisions in a stressful situation. It's helpful to keep a trading journal and regularly analyze your trades, as this will help you spot patterns and avoid making the same mistakes again. Another common trap is increasing position sizes too quickly after a few successful trades, which dramatically increases the risk of large losses. Try to stick to a pre-established exit strategy based on specific triggers, not emotions. Remember, the main goal of any trader is not just to make money, but also to preserve what you've earned by following a risk management system. In the meantime, the position closes in the green, bringing us $380. there wasn't a strong upward movement. And, in my opinion, it's more of a stroke of luck that we were able to close the trade with a profit. Friends, we made $1,865 from our trading. Trend can truly be called your best friend, a trader, as long as you learn to identify it in time and don't let your emotions take over. If you want to try your hand at trend trading, make sure to study the basic indicators, learn to read the chart, pay attention to the levels, and avoid obvious mistakes. And, of course, remember about risk management. Without a clear plan, even the strongest trend can turn into a source of losses. If you're watching this video, it means you're already interested in making money through trading. So, don't put it off, take action. Subscribe to my Telegram channel, where I share valuable knowledge and strategies that really work. And I also have a free gift for you, just message me privately. All the links are in the description. I hope this episode was helpful for you. If you have any questions or would like to see more examples, feel free to leave a comment. Give it a thumbs up, subscribe to the channel, and don't forget to hit the bell so you don't miss the next video. Thank you for your attention, and see you soon!